The economy is sending us a lot of mixed signals. I mean, it always does. We look at a lot of data of the labor market, of GDP, of wages, et cetera. But now more than at any time in my experience at the Fed, almost 7 years, the signals are wildly divergent. So I mentioned first 2 quarters of GDP showed negative growth. Typically you say, hey, there's a recession. But typically a recession comes with widespread job losses. The job market was humming over the course of this year, creating a lot of jobs. So that suggests we were not in a recession in the first half of this year. So one of the challenges, though, we got these mixed signals, and then as Gene just hinted at, monetary policy takes a couple of years to work its way fully into the system to have its full effect. So some parts of the economy that you all deal with a lot, monetary policy affects it right away. So the housing market, monetary policy affects the housing market really fast because of mortgage rates. So mortgage rates went from around 3 to almost as high as 7 over the course of this year. That is slamming the brakes on the housing market. But other parts of the economy, it's going to take much longer to work its way through. It's going to take longer to work its way through to wages. It's going to take longer to work its way through to food prices and other parts of the economy that are not quite so interest rate sensitive. It will have an effect, but as you indicated, it's going to take some time. So the question is, we've done a lot of tightening. There's a lot of tightening that still has to work its way through the economy. As Gene was hinting at, maybe we've done enough. And if we keep going, maybe we'll end up doing too much and overshooting because of these lags. That is absolutely a risk, but the challenge is we're seeing almost no evidence that underlying inflation has peaked or is on its way down. And so for a year now, we've been wrong on inflation. We kept thinking, hey, it's transitory. I said that. We kept thinking these supply chains are going to heal. People are going to come off the sidelines. People are going to stop buying goods because they're now buying services again. All of that has not happened nearly as quickly as we thought. And so I am not comfortable saying we're just going to pause until we see some actual evidence that the underlying inflation, so things like wage growth, things like services inflation, these things that are sticky, commodity prices move up and down, but underlying inflation like wages and services tend to be stickier. We're not seeing any evidence yet that those things are moving in the right direction. And so for me, until I see some evidence that underlying inflation has solidly peaked and is hopefully headed back down, I'm not ready to declare a pause. I think we're quite a ways away from a pause.